All right, one more joiner. All right, ladies and gentlemen, very warm welcome back to our Sunday Mastering the Mental Game session. Today it's session number 4, and this is supposed to be the last one. If you have any topic, right? If you have any topic that, let me get into the slides. If you have any topic that we haven't discussed yet, that you feel like I missed out, or that you in particular are struggling, that I have not addressed, then please let me know. We can always do another session about a specific topic, but I need to know obviously what if there's anything you are struggling with in particular that I have not addressed here, because most of the topics, right, are kind of derived from what I was struggling with, what we were struggling with, and what I have seen students are struggling with, right? So that's how I created this Mastering the Mental Game session. So let me know if there's anything that you would like to discuss, so we could always do a 5th or even a 6th session, right? As I said in the very early beginning, in the first session, we can do this theoretically every week, but I don't think we can fill content for that kind of session. All right. So is there anything you would like to address, mention, comment from the from last week, from the previous weeks? Anything interesting that you would like me to touch on? Again, completely up to you, obviously. And yes, otherwise we move on with today's topic, basically, which is you can only improve what you measure, right? I mentioned that I mentioned that statement, or this sentence I mentioned already quite some time, a few times last time and also the previous times, how important it is that you as a trader, as an investor in a market, in a financial market, you can only evolve, you can only get better, you can only improve if you really know what to improve. And the only thing you know what to improve is really if you have this on a piece of paper, black and white. And it doesn't work by just taking a few trades and saying, I believe, I think, because I hear this also very often, to say, I think I should change this, or I might just do that, right? If you don't have proof that you should tweak things here and there, then why would you change stuff, right? And of course, what is always important is always to have a proper sample size. And this is something we mentioned in the very, very beginning of these Mastering the Mental Game sessions. A problem that I see very often is that people just are not patient enough. It's all about that kind of patience, right? That you take 3-4 trades and you're like, this doesn't work, let me change this a little bit. I take another 2 trades, let me tweak here a little bit. This is not a sample size that allows you to change anything on your strategy. Of course, if you don't have a set strategy yet in place, then there's, well, the foundation is already wrong. But if you have a set strategy in place, we talk about this a little bit today as well. If you have a set strategy in place, then you need to have a proper sample size to really see what is working and not. And when I say proper sample size, I would say everything below 10 trades is not a proper sample size, right? And then obviously it depends. When we have this discussion now, the whole discussion is based on, I would say, weekly/monthly income, where you have on average maybe 2 trades per week, right? So this is where at least 10 trades up to, I would say, everything between 10 and 20 trades is a proper sample size. Everything below that just doesn't make any sense. Of course, if you're a high frequency trader, nobody is most probably here having 5 trades per day, then we have a different discussion, right? And I would say even more trades, you need a proper sample size. But for that particular trading style, income goal, wealth goal, yeah, everything less than 10 trades is not a proper sample size. And then it's also important that these 10 trades are not randomly executed, that all the trades, let's just take a sample size of 10 and stick to that 10 for now, that the 10 trades you have taken with the same set of rules, and also not took a random set of rules for every second trades, that you stick to that set of rules for the 10 trades. This is really important as well, right? And today we talk about two different kind of data that you can log. You have the mechanical data, which is the trade log, and you have the internal data, which is the trade journal. Are they equally important? Maybe not. Obviously, I'm also an more like analytical person, so I would say that the mechanical data is more important than the internal data, which is the trade journal. However, I've also seen that some of us, me including, are getting really emotional in the marketplace and doing a lot of revenge trading and stupid cowboy trading. So there, the trade journal, and we touch on that later on today, after the mechanical data, the trade log, I think then becomes equally important. But if you are kind of more like rational, even though in the market nobody is fully rational, like literally nobody is fully rational, we are all emotional human beings, and we all make stupid decisions, but some make more stupid decisions than others, and some may stick more to their plan than others. Some don't have plans at all, and this is where in general you would say the internal and the mechanical data both is important, right? And I have a slide prepared that you have also seen in the Proactive Investor course, in the application course, that really addresses basically that is just one big puzzle, and everything is one piece to fit together to make this thing work. Now, when it comes to logging, and the worst comment when it comes to logging the mechanical data is, why would I need to log? I just print my trade statement and I have all the data there, right? And by the way, I hear this so often, right? I just print my trade statement. I don't need to log because all the net important data is in my trade statement, right? And this is absolutely BS, and this doesn't make any sense whatsoever, because we don't care, literally, we don't care what's in our trade statement, because I don't care whether I anyway know my P&L, right? But I don't need to know exactly my entry price, my exit price, my stop loss, where I got stopped out. I don't need the time of the day where I got into a trade. I don't need all this data that I don't have any use for, right? And the data that we need are basically what we need to log are our rules, right? This is really important. The data that I have to log are my or our set of rules. And then by having a sample size, and imagine now, I'm not sure who is logging and who not, and I don't even want to ask, right? To be honest, the room of people here who is logging in, who is not, and who I just imagine, I'm just want to say, imagine you have 10 trades, and every single trade or let's say you have 20 trades, and every single trade you took with the same set of rules, and you log all these rules, imagine what you can derive from that kind of sample size, from that kind of data, because then you can clearly make small changes, improvements, and tweak on certain rules that are not science-based. And this is stuff that we discuss in the blueprint course, that some rules are science-based, right? That you only buy in demand and you only sell in supply, and you don't buy in demand and you don't sell in, you don't buy in supply and you don't sell in demand, right? This is just pure science. There's no way around that. However, all that, you see that here on the slide, how to enter a trade and the trade management, this is where we just have rules in place to become consistent in our approach, because only then we can measure, like, if we are consistent in our approach, and then if we are allowed to basically, again, we discussed this last time and the time before, if we are allowed to scale up our business. And if you're not consistent in our approach, why would we be allowed to scale up our business, right? And how can we measure consistency? If we have a proper set of rules that we log, and we basically then see, hey, does everything I do actually works, or it works, but there's still space for improvement, right? And what I've seen throughout my years of experience is that, yes, a certain set of rule works, but there's not always, but very often there is space for improvement, and there are small things that you can tweak. What is also really important, ladies and gentlemen, is that you start with that base set of rules, right? I mean, we have here in the room, I can tell, really experienced traders who are trading for several years, and we have traders who are basically just starting off trading demo, right? So again, like we discussed last time, for everyone here, depending on the experience level, the base point is somewhere else, right? The milestones are somewhere else. I'll touch base on both more experienced traders and, of course, the beginners here as well. If you're a beginner, let's start with the beginner, you have a basic set of rules. And that basic set of rules is the guideline given to you in the blueprint. We have in the blueprint for everything, for every single piece, right? We have a rule, right? You have a rule for trend. You have a rule for big brother, small brother, level on top of level. You have a rule for stop loss placement. You have a rule for when to take profits in a trend, in a counter trend environment. You have this is what we call a basic set of rules. This is your starting point, all right? And as I just mentioned, this is for the beginner, and this is where you have to start taking trades. And then you basically see, okay, and this is kind of a little bit, I have to say, and I have to say it's a little bit vague in the sense of, you could say as a beginner, you could say, well, this matches this trade that I took, all the trades that I took, especially as a beginner, all the trades that I took are basically, I followed all the entire set of rules, but I got stopped out 9 out of 10 times. So what is wrong? Most probably you didn't follow, and this is basically only if you're a beginner, most probably, then in this case, you didn't follow the entire set of rules like you were supposed to, right? And this is a problem a beginner has, obviously. If a beginner would say, yes, I was covered by monthly demand, I was covered by weekly demand, and the trend was up and I was going long and I got stopped out, what's the problem? right? And very often, and you can clearly see, well, that monthly was like pure, that monthly demand zone was pure garbage, and this was not even proper weekly coverage, and the trend was not really up. It was more like sideways and anticipatory down. So that's the problem, obviously, you have as a beginner, right? But also that's why a lot of you have then mentors where you can take the trades and discuss if you have this kind of issue where you don't clearly see if you not really know if what you did was right or wrong, that you can again schedule a session with your mentor and go through these trades. That's the purpose of a mentor then as well, right? But overall, you have that basic set of rules in the beginning, right? And then you take trades and you start taking trades. And the more trades you take with that basic set of rules, the more you basically, and you lock these trades, the more you understand where you can make some tweaks and where you can make some changes, right? Now, what I stated here is, and guys, right, again, it's a little bit of a monologue from my side. If you want to add anything, questions in regards to trade management, logging, we get into trade management in a second as well, of course, then please type it down already in the chat, and I'll comment and address these things once we, once it fits into that kind of topic as well. So for me now here, for just as an example, I divide it into 3 parts, and I want to mention here as well, in terms of trade log and trade journaling. I hope every one of you guys watched Clemens, his session that is right now saved in the general sessions, right? As we speak today, which is Sunday, November the 28th. I think I didn't mention the date in the beginning. It's right now saved in the general sessions. It will move with the new platform that comes soon. The timeline is still this year. We'll move to the classroom module, but it's in the general session, and I hope everyone watched Clemens's. It's 2 parts where he talks about logging, journaling. He's providing you guys, you find that in the classroom under Get Notes. It's an Excel file, the log as well that he's using, and he's kind of best practice when it comes to thorough work, logging, journaling, all the trades, right? Now, trade criteria. So I split it into 3 parts, or you can generally split it into 3 parts, which is trade criteria, trade entry, and trade management. All right. So for me now, right, I look in general into when I want to see whether this is the trade criteria. What I mean with that is, am I allowed to is this something? Do I want to trade this? Right? It's just, hey, I'm looking at cocoa. Do I want to trade this? I'm looking at soybeans. Do I want to trade that? I'm looking at the S&P for myself. Do I want to trade that? Right? And then I have this as a trade criteria. Am I covered by monthly? Am I covered by weekly? What's the monthly trend? What's the weekly trend? Again, we talk about weekly income here, weekly monthly income. Anyway, it's most of the times overlapping. I'm looking at my zone qualifiers. Just basically, for me, it's eyeballing them again, right? A beginner would like, here you would split this in all of, would basically say, okay, all my zone qualifiers. Is that zone fresh? Is that zone fresh based on wider preferred? Would even say, hey, is that a rally-based rally or a drop-based rally? Because even here, right, even here you could recognize, and I don't know how, if you recognize that as well, and you only see that when you log it and you see the trades, that with the trend, the rally-based rallies and drop-based drops work nicely. But once the trend is slowly shifting or price is going a little bit sideways, these rally-based rallies and drop-based drops are not working as good as the U-shapes and inverted U-shapes. So I rather wait always for the inverted U-shapes, that they work better. That's something I realized based on my log. Is it something that I can explain based on science? No, right? It's just my log clearly told me that at some point of time in my trading journey that, hey, I got stopped out so often taking the rally-based rallies or drop-based drops, and then price went higher to the inverted U-shape or went lower to the U-shape, and I should have taken the U-shapes or the inverted U-shapes. Well, this is how I then slightly, because I saw that in my log, so I slowly changed that approach, that I see, okay, when I have the U-shapes or the inverted U-shapes, I rather stick to them when I'm not like in a picture perfect trending environment. So you would, as a beginner, again, you would basically hear the zone qualifiers, you would list all zone qualifiers, and you would also log them and see basically freshness and all these kind of things. You would basically, hey, how was my leg out? And really, as a beginner, you would go into each and every zone qualifiers. Of course, I most probably, you don't have, if you're already advanced, you don't have to do this anymore, right? I don't have to go into each and every zone qualifier, right? We can eyeball these zones. Is it a good zone or not a good zone, right? But this comes then later. That's why we have to differentiate between somebody who is more experienced here and somebody who is a beginner. Beginner would list all of the zone qualifiers, would log them as well. If you're not a beginner, you can eyeball them, and it's just like, okay, is it a good zone? Is it quality or is it not quality, right? We can see, like, as an experience, you can see that. Well, what is still important is the LOL part, right? And this is something that is really, I mean, I can also not, I don't know if you can confirm that or not, but I can also not explain scientifically why actually we have that level on top of level always hits, if it's a demand level on top of level, why you have that U-shape followed by rally-based rally is so powerful that price goes usually to that U-shape into that wider version and then moves from there, right? This is just based on, I don't know how many 100 trades I had at some point of time in my log, that this was like, wow, that level on top of level. I have that lower level here when we talk about demand, and it's like that U-shape was followed by rally-based rally, or supply inverted U-shape followed by drop-based drop, that these U-shapes, the wider version there, most of the times, right, is getting hit, right? And this is something that also based on experience, and not experience on a piece of paper, that we can see black and white, that wow, that has kind of a that has a pattern, right? That pattern we can see most of the time. So let's apply this pattern in our set of rules. And then obviously more like in the recent trading journey, we added seasonality valuation and COT as well. And now obviously for me, it's just here. That's why I have these kind of, not boxes, but these circles where I tick these boxes for me in my head, basically, where I say, okay, look at this. It ticks. If you have 1, 2, 3, 4, 5, 6, 7, 8, right? Depending how you wanna, if you wanna combine zone qualifiers, LOL. I just stated this because it's just important, but that you have like, okay, you have 5, 6, 7, 8 boxes. How many of these boxes you can tick? And of course, sometimes you have that perfect trade where you can tick all the boxes. But if you have to wait, and I know this, right? That, and we don't do this. And the most recent trade example that I just posted, Cocoa, right? It doesn't tick all the boxes, right? It doesn't tick all the boxes. In fact, it ticks, right? If we now use an example here, right? And if we just use an example here, the most recent trade that I posted here, right? So which is weekly income basically. So I don't have to mention it's a daily demand zone because it's anyway it's then weekly covered. So does it have monthly coverage? By the way, it's the monthly chart I don't display here, but the monthly is, there's no monthly coverage, so it doesn't tick that box. Is it weekly coverage? Yes, it's a very actually high quality weekly. It's a U shape that is fresh, tick in the box. So what's the monthly trend, weekly trend? It's both sideways. So it's more like neutral, right? It's not negative. And I mentioned that in the rationale of the trade in the comments, it's more like sideways, right? Is it an LOL? It's not a level on top of level. I mean, on a daily, yes, it's actually, you have to say on a daily, right? You have to tick the boxes correctly. On a daily, yes, here is a level, here's a level. It's a level on top of level. Yes. Is it seasonal? No. Valuation, if we come down, very likely we are undervalued. And COT, as I mentioned, you could split this, and I would actually, it would make a lot of sense when you lock to do the COT, that you have the long-term COT, the 6-year look back, the 3-year look back, the 6 months look back, and also that you add also here that there's commercials and that you add retailers as well, right? Because when the retailer on the opposite side is also, it's also at the end a zone qualifier, right? Because the retailers are most of the time at the with certain assets at the wrong side of the game, right? So you would tick COT, 3-year look back bullish, would tick that box. The 6-month look back bullish, tick that box. The retailers, the 3 years look back, they are bearish. I would tick the box because that's positive for us if we want to go long and the retailers are bearish, right? The 6-month look back is bearish here as well. Tick that box. So 4 boxes on COT already ticked. Valuation box ticked. 5 boxes ticked. Seasonality boxes not ticked. LOL boxes ticked. Monthly weekly trend boxes not ticked. Monthly coverage boxes not ticked. Weekly coverage boxes ticked, right? So I would have at the end, right, if we look here, this is how I stated it basically: 1, 2, 3, 4, 5, 6, 7 boxes ticked, and basically you have 2 boxes not ticked, right? So for me, I would then clearly say, okay, I have most boxes ticked, important box, and then you could also weigh these boxes in terms of, I mean, for me, I don't weight them in terms of logging here that I say this weighs more than the other one. But of course, something like, so for me now here, when it comes to agriculturals, the COT, as I just internally in my mind, my process that I go through is weighing more than, for instance, am I now covered by monthly? If I'm high quality weekly, daily, then I'm fine, for instance, right? Or put this over seasonality as well, right? I would do this as well, right? So this is how, right? You guys can follow me, right? Why I'm doing this. So you're so quiet today. You can, is everyone like, or is somebody's confused why I'm doing that? All clear, Rose, of course for you it's clear, right? But I hope everyone is clear why I'm doing the way, why I'm trying to, what I'm trying to explain here, right? Now this is all clear, perfect. Yeah, the experienced traders are saying all clear. that's perfect, right? So at least I reached the experienced ones, right? All right. So I want to obviously have most of the boxes ticked. Do I need to have all boxes ticked? No, right? But imagine if I have this simple box methodology, if I have 20 trades next to each other, and I can clearly see which boxes were always ticked and which boxes were not ticked and which trade worked and which didn't work, right? So then I can clearly already then say, okay, maybe, yes, if let's assume, stupid example, the weekly coverage, right? As a beginner, you would then realize maybe that, hey, almost all my stop losses, they were not, I was not covered by weekly. I just took a daily that was like standing in the middle of nowhere, but I was not covered by weekly. And then you clearly, and then you see, hey, these are my losing trades. And then you say, okay, maybe I should add a little bit more importance on the weekly coverage, and all my trades that I take has to be covered weekly as well, right? So this is how you then clearly can make already an improvement. Now, the trade criteria is just for me, okay, is this something that I want to trade, yes or no? And then of course, and this, most of that stuff, right, can be, I can explain scientifically why it is important, obviously, right? But not everything is always in line. Sometimes there's the perfect trade, but we hardly get the perfect trade where we can tick all the boxes. But we can, it's important that you tick most of the boxes. This is really important. Now, the question, and this is now becomes more like, well, this is something that is really, everyone is doing it differently, right? And that's why it's also so important that we lock these things, because here on trade entry and trade management, we can make, what I believe now at some point of time, we can make the biggest improvements, right? Because this is given. I mean, that list for me is given. But where I can make improvements is, how do I enter the trade and how do I manage the trade? Now, I think I added most of the important things that we can use as a trade entry. You can either use a reversal tool, reversal in terms of actually, what I wanted to say here is not reversal, the price action breakout is the reversal, right? More like here, confirmation, pure confirmation, that you wait for price to get into the zone, or basically that you say, okay, price, for me, whatever confirmation means, in the sense of price is what Jan is, for instance, doing, right? Hey, price is trading above yesterday's candle, now you can go long, right? It's a little bit overlapping with price action, but what I mean here with price action is really then here basically using like this as a reversal tools, like hammer candles, shooting stars, engulfing, whatsoever, right? So here it's more like confirmation, that you say, okay, price is confirming that I'm trading above, below yesterday's candle, I go long. Or you have that reversal that you said, okay, based on price action tools, or breakout, trend line breakouts, right? Supply and demand confirmation, that you wait for price to get into the zone and coming out to enter the trade. A supply pure set that you learn in the very, in the blueprint as a really basic tool to set your trade. Trade entry, zone qualifiers. Why is here zone qualifiers? I don't know, and it's not supposed to be here. So this is how you would basically, these are your possibilities, right? And for instance, where you can make a big change, what I believe, what I saw, not what I believe in now as well, yes, but what I saw black and white, that we don't always have to just set our trades, right? We can wait for kind of reversal tools, right? This is reversals, because we can even now make a breakdown here, and we could say, does it make sense to make lower time frame reversal? Does it have to be when I find a trade on a daily, weekly income? Do I have to wait for that daily reversal candle, or can I go down to 240 and wait for 240-minute reversal and get into the trade then, right? And I always say that when it comes to how you enter that market, there is no right and wrong, and this is something you have to understand. Where it comes to right and wrong most of the times is here, the first part. Is that a good trade, yes or no? How you enter that, if you come to the conclusion it's a good trade, it's more important, like it's more than just more like individual. How do you enter the trade? This is then okay. This is completely up to you and to your style. But as I just said, it's based on your style. You have to develop that style. Who in the room can say they developed a style already, how to enter the market? Like, kind of, who is a little bit confused here, and who would say they kind of developed the style, but who is like more like, I'm lost in this kind of, and it's more like for experienced traders, right? Or like people who have already proper sample size. Who has their own style, who has developed their own style in the sense of, this is the way how I manage, this is how I enter a market, or who is like saying, I have no idea, right? Lars, of course, yeah. Lars, yeah. Yep. So pretty much. Yes. So you see, and this is the point, right? And I see, like, these are the most experienced, like, in the room right now, the people who are like have a, I would say everyone who answered took at least 50 trades in their life, right? Everyone who answered in the chat has taken, I think, at least 50 trades in their life, right? So yeah, yeah, most probably you took maybe 52. Huh? Yes, indeed. You see, I was lowballing, right? Most probably it goes more like towards 100 at least, right? So, and you see, this takes time, and then it doesn't make any sense to, okay, after 5 trades, I change now my entry style, right? Post Christmas trade. Plus the Christmas trade, yes. Yes, amazing. No, so, and I think that you only can develop that style if you properly lock your trades and you see what kind of works and what doesn't work for you personally here, right? It might have something to do with your personal circumstances as well, right? I don't want to go too deep into this. Like, if you're busy from 7 in the morning to 8 in the evening and you really don't have time to look for these reversals, for instance, then this reversal strategy for you, just because of your personal life circumstances, just doesn't make any sense whatsoever, because you don't have time for these reversal strategies. So you would need to, at the end, most likely get into always the kind of set or breakouts, right? And you would set an alert and trade these trend line breakouts up and down. And this is stuff that I personally, I have to say, also kind of developed throughout my journey, that I, in the beginning, started with that set approach. Then at some point of time, I tried that confirmation, and I was like, confirmation, nah, this is not for me. I rather do set than confirmation. So supply and demand confirmation, I mean, for me personally. And then I was okay at some point, and I added this price action into my how to enter a trade. I was like, wow, that helps me quite a lot, getting maybe a little less stop outs. And then I was like, and then after price action, I was focusing then more like on the trend lines, and then also, hey, the trend line breakouts, they work also nicely if I found a trade I want to take, right? The base is always that. If that is wrong already, right? If you found a shitty trade, then it doesn't really matter how you enter. You might get stopped out. This is really this is important. A good question, Stefan. I answer that in a second. I'll get to that in a second. All right. Now, and eventually, if you find a trade that is kind of decent or good, it really doesn't, it's not so relevant how you enter. Then it boils down to also a little bit of profit margin, right? Because at the end of the day, if you find a big daily zone, for instance, a huge daily zone where you don't get profit margin, you would say, okay, I cannot set it because I don't have profit margin. So you would wait for a reversal and you trade that smaller reversal, right? Something we discussed also in the price action series in that course. If you have a big zone, you would then say, okay, I don't have enough profit margin, but I like the setup so much, so I wait for a reversal that I think that's so high quality and high probability that I wait for lower time frame reversal to enter the trade to get a higher profit margin, for instance, right? But this stuff comes with experience, right? You cannot apply this in the very beginning. How can you, right? Impossible. So Camilo, it's difficult to develop, especially if the first 2 or 3 times doesn't work. So logging, refining, like you say, is key. It's difficult to develop, especially if the first 2 or 3 times doesn't work. Can you please specify that? I don't understand. What do you mean develop the first 2 or 3 trades? Or what do you mean? I don't really understand. If you can maybe rephrase it, then I can comment on that one. Stefan is saying, how much times do you check the trades or trade opportunities per day? For me, it's difficult. For me, I always have my screen open, when I'm sitting here in the office, my screen is always open. And as I mentioned this last time, I have always TradingView open where I have my watch list. So I always have an eye on that, like literally always. But so that's why for me, it's because I'm doing that, right, for a living. But if you're not doing this for a living, then I would anyway say don't do daily income, weekly, monthly income. And I think if you check this once or twice per day, or if you check it once per day, if you're really busy, it's more than enough. If you check it either in the morning or in the evening, and based on your things, based on your setups, you can then engage or take action, right? But if you stick to weekly, monthly income, once per day for 30 minutes should be, or 15 minutes, if you have a watch list ready, should be enough, right? Because you don't have to do the whole analysis process every single time. You have that watch list, and then basically once per day, more than enough should be. I hope this makes sense. And that's a problem. When you're testing your strategy, you get discouraged very easily if the first 2 or 3 trades fail, which is nonsense, Camilo. I have to say that is absolutely nonsense. 2 or 3 trades. I mean, you're gonna take 1,000 trades in your entire life, and you base your decision on 2 or 3 trades. Then I just generally speaking, right? You have to see the big picture here, right? Even if the first 5 trades fail, this is not a sample size where you can run a conclusion, right? Just doesn't make any sense, right? 2 or 3 trades is nothing, taking into account how many trades you're going to take for the rest of your life, right? And that's why people were laughing when they said 51 plus trades, right? So what's the percentage? What is the percentage? What's the ratio? If you do the percentage ratio on 2 trades, right? Based on 51 trades, right? 50 trades, 100 trades, right? So, and as how, and as I want to comment more on that, because it's a really, and it's a really important topic. And I like what you said. If you're a beginner, it is discouraging. Yes, but in the beginning, you make mistakes anyway, right? Because that's what I meant. That's what I mentioned. You might think, and that's the problem, right? That's why it's so important. Some of you have a mentor, and it's great. And it's in the beginning, yes, it's discouraging. But let me tell you, Mark Douglas, Trading Psychology. He has a good book as well, right? What is it called? I read the book, actually. It's the only trading book I read because it's purely psychology. What's it called? I forgot. Maybe, Tianis, you know it. But I would like to address it as here, comment on that as well, because it's really important. Trading in the zone. Yes, thank you. Trading in the zone. I think there are 2 parts even. It's purely psychological. So in the beginning, that's the problem. You think you tick all, and that's the problem. You think you tick all the boxes. And when I look into, or let's assume you're my, and I've seen this so many times. Let's assume you are like my personal student, right? And you're really in the very beginning. Now you take your first 5 trades, right? Or like the first, I don't know, even like when I see people after 20 trades or so, but let's assume these are like your first few trades. And they think they ticked all the boxes. These trades, most of the times, I have to say, are garbage, are pure garbage, right? But that's okay. That's why you are a beginner. Even if you thought that it ticks all the boxes, I can tell that 9 out of 10 trades are pure garbage. But that's okay, because you are in the beginning. You are in the beginning of your journey, right? So it doesn't mean the strategy is not working. It means you're applying the strategy wrong. 100%. That's why you're a beginner, right? Because a beginner cannot differentiate between a good zone and a bad zone, right? Even a beginner has problems like looking properly at the trend, or I don't want to even say anticipate the trend, right? And all the things like, hey, look, why did you go long? Why did you go long below that shooting star? Because he hasn't looked into shooting stars yet, right? Like, things like small things like that, right? But that's the problem of, that's what I just said in the very beginning. That's the problem of being a beginner. Even if you think you ticked all the boxes, and then you ticked all the boxes and it's still like could be a garbage trade, because in reality, most of the boxes were not, I would have not ticked as a experienced trader. You know what I mean? And for sure, if you look back, and for sure, I can guarantee you, think about, even if you don't have locked them, and I can ask everyone, if you look back to the first trades that you took in your life, are these trades you would take today as well, with your now being more skilled? This is like, I'm addressing everyone. If I look back only most probably 3 years back, or even 2 years back, there are trades that I would today not take anymore. Because you always, year after year, you evolve. And most probably, if I look back, in my very beginning, most of these trades I would not even look at today. You know what I mean? Does it make sense? So that's why this discouraging feeling doesn't make any sense whatsoever, especially in the very beginning, because most of the trades that you take in the beginning, that you find yourself in the very beginning, are garbage anyway. That's why you don't, and that's why we would never encourage you to trade big risk sizes. That's why we have that milestone plan in place, right? That starts essentially in a demo, right? Or with a very small risk amount, because we know that you have to, and that you have to, of course, it's discouraging if you lose like a shitload of money in the beginning, because then you have that, right? Then you only think about the money you lost and not really about the process. And we had, right, Cervantes is also in the room, right? We talked about this, like the process, right? So many times, right? How important the process is. I remember, right, Cervantes, for instance, is aware like how important the process is, right? Yes, exactly. So that's why you have that milestone. That's why you have that milestone plan in place that helps you, right? That you don't get discouraged, because you would not risk your, provocatively speaking, you don't risk your house on these trades in the beginning, because you should be aware of what I'm just explained to everyone, that in the very beginning, it needs time to get used to the strategy and to really master a strategy, a base strategy that works for you, right? And that's why you have to practice it in a demo or very, very small risk amount that doesn't hurt. And then you also don't get discouraged by 2 or 3 trades. You're not even getting discouraged by 6 or 7 trades, because it doesn't hurt. That's how I always felt. It never hurt me in the very beginning, because I never risked a lot of money that feels a lot for me. And then that's why it's not discouraging. But I understand how it can be discouraging, because people start immediately risking a lot of money and then they lose. And the discouraging feeling is not that they basically, that the process failed. The discouraging feeling is coming from, hey, I lost a shitload of money. I thought I can make money right from the get-go. That's the ultimate reason. 100%. Right? If you make yourself aware that this is a process, and you start off milestone planning with a very low risk amount or in a demo, then working on a proper strategy for a certain amount of time, it's actually very enlightening, and it's very, I think it's even rather encouraging, because you will see by the trades that you take, that by the trades that you take, that more trades you take, that it should get better and better and better. So Dennis is saying, this was so great, was looking back the first trades ever, I think 1 month ago, because the old broker wrote me because of closing the account for inactivity. Damn, this was hard and funny to look at. This should be also be the first trades of Tobias too. Yes, right. So most probably we would laugh about the trades that we took in the very beginning, right? And Rose is saying, it's not always about the money, but failing and not nailing it, right? Again, it's how can you nail something in the very beginning, right? How can you nail anything that is in the very beginning, mentally, but still, it's always, I firmly believe it's always about and we discussed this in the past, we discussed this now really extensively, that is setting yourself up to, hey, I'm running a business is not successful overnight. It takes time and it takes patience, blah, 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 right? And you really, it's not only me saying that, you really have to set your mind, and you really have to get the proper mindset. And when we talk mindset, we talk that business mindset, right? And then, so trade entry, right? Something you have to look at some point of time. And then the trade management, also really important part. Now, and this is, I think, one of the most critical aspects as well. Now, you have a basic set of rules, right? Hey, that 33% stop loss placement, or where to place your stop loss, just a little bit below, above the distal line. What does a little bit mean? Hey, we give you a rule, 33%. Okay, I have a rule. Why 33%? because it's a rule. You needed a rule. You can do 25%. All right, you can do 40%. Maybe 40% doesn't really make sense, because then the zone, your profit margin is deteriorating, right? But in general, it's like, make yourself a rule. Is it 20%, 25%, 31%? It doesn't matter. It's a rule. So we have a rule there. Now, stop loss movement, and this is really critical. And this is where actually I think now the logging becomes so valuable, right? And this is where my personal trading really started to, at some point of time, when I started to really got much better in terms of the results, in terms of the R's that I collected, when I was really tracking this part, the stop loss, when I moved my stop loss. So in other words, how I, first of all, stop loss movement, when I move my stop loss to break even, this is what I mean here, right? What I mean here in terms of break even. And then where do I place my targets, or do I do or how do I trade? I think this stuff here, it's really critical to look at. This not so much, because I have to, I say how it is. I do this most of the times. I really use just a little bit most of the times. I look at pivots that I know, okay, I'm below or above a pivot, or if I'm really against the trend, that I use that 33% stop loss rule, or if I'm with the trend, then I just use a little bit. Check the round numbers, that I'm not putting my stop loss on psychological straight numbers, right? So all these kind of things that we discussed over and over already in the courses and the live sessions and the price action sessions, right? But also that stuff that comes with experience, right? If you don't have experience, you just use strict that 33% stop loss rule because you don't know better, right? And now, when it comes to stop loss movement, this is really critical. So we tell you in the beginning, if you trade against the trend and anticipatory, you move your stop loss when price reached 1-to-1. If you trade with the trend, you can leave a little bit more wiggle room. You move your stop loss to break even at 1-to-2, right? But who says that this is actually ultimately the right thing, right? It's just, again, you need a rule that kind of makes sense to move your stop loss, that you know, when do I move my stop loss to break even? But if you start tracking this in your log, you might see, for instance, and this is a really important factor, that if you took 10 trades and maybe 5 of them were break even, and all these 5 trades, you moved your stop loss at 1-to-1, so you got stopped out at break even. I hope you can follow me. So 10 trades, 5 trades you took, all stopped out at break even. For all trades, you moved your stop loss at 1-to-1. And you then look at these 5 trades that you got break even, that 3 of them, if you didn't move your stop loss at 1-to-1, would have hit your target, that is 1-to-4. Right? So if that's the case, and you see that black and white, that, hey, if I had moved my stop loss maybe at 1-to-2, or maybe didn't touch my stop loss at all and just let it play out, I don't know, right? I don't know. I'm just making I'm just making this up. Could be everything. But if I didn't move my stop loss at 1-to-1 to break even, these trades would have made me, I don't know, 5-6 R's more. Or even from a negative R, maybe I would have I don't know, positive. But you would never know that if you didn't log it. And that's where it's really important. Also with the targets, right? That we say 1-to-2 target against the trend, 1-to-4 target with the trend. why to have targets at all? Why not just trailing it and based on price action, then at some point take profits? Now, I'm just, right, I'm not saying you should now do that. I'm just saying it doesn't mean that taking profits with the trend at 1 to 4 and taking against the trend at 1 to 2 is like sizzled in stone and you have to do this until the rest of your life. But you have to understand what kind of you should do. Now I know now because I know from Julian and his first session where he said he always takes profit at 1 to 4, regardless of whatever is the prices market is suggesting. Perfect. That works for him. That 1 to 4 taking always, and of course his results are speaking for itself. I don't have to address this anymore, right? Tremendously great success, but this is his style that he developed throughout the years, and he's also trading 5+ years already, that he says 1 to 4 he takes profit. If I look at my personal log, right? If I look at my personal log, for me, this would, for my trading style, this would never make sense. So now I'm not saying, as I just said, I'm not saying you should do it like Julian, you should do it like me. I always say, find your own way. Take the base that you have and from there develop your own strategy, in the sense of not the trade criteria. Don't come up with something funny why you get into a trade or not, or why you find a trade good or bad. More like when to take profits, how to trail. In my trading, I personally know that at least 2 times per year, I'll find a double-digit risk to reward trade. 2 times per year, approximately. Including add-on, or this is another topic. We cannot get into every single piece. We could make a series out of that where we get into every single piece, but I don't know if this would be, if you would be interested in that. Anyway, the point is more like, since I know based on my trading that I can find double-digit risk to reward trades, and I find them throughout the year, that it would be silly for me taking profits at 1 to 4 all the time. I'm just saying all the time, that I see a trade that has the potential to go 1 to 10, 1 to 11, 1 to 12, and I don't try to at least play out that. I'm not saying this is the right, again, I just want to stress, I'm not saying that this is the right approach. I'm saying that based on my trading, this is the right approach, because this has, my log has proven that. My log has proven that if I only take profits at 1 to 4, I would make less R's than when I find these big trades that I play them out. This is really important. How do you do that? And we get to this trade review part after that last bit here, the trade management part. Then we get why we have to actually review trades, because obviously it's a nice, actually it's quite a nice transition, because I only know these things if I review my trades at some point of time. If you just drop these trades and never look back at these trades that you took in the past, you cannot come up with a conclusion whether I should take maybe whether I should take profits later, or maybe I should have taken earlier, or I should have played it out, or whatever you should have done. And you only know this if you review trades. And then you can also develop your own kind of set of rules when it comes to, when do I move my stop loss to break even, right? You always start with a base. Then when do I move my stop loss to break even? Do I have targets? Don't I need targets? Do I trade, for instance, based on price action? And do I try to play it out until basically whatever the chart is suggesting you, right? You look at monthly demand, you buy at monthly demand, and you see, okay, hey, much higher is weekly supply. So I believe price can go all the way to weekly supply, because before that there is no obstacle. So price can travel all the way to monthly supply, and you basically try to play this out, right? To play from monthly demand to weekly to monthly supply, and not say, okay, halfway through, which is a 1 to 3, 1 to 4, or 1 to 5, I just take blindly profits because it's a 1 to 5 or 1 to 6 or 1 to 4. And all the way to monthly supply would be a 1 to 12. But you have to see if you can really, in your log, for instance, that you can really anticipate these movements in retrospect by reviewing trades. And that's why, do you guys have any questions here? Does this kind of make sense? What we are logging here, what we are trying to log here? Does this make sense? These are all points that everything that I mentioned right here, every single point is we need to log basically, right? And then we can see what we can improve. Here, it's more like ticking boxes. We don't have to tick all the boxes, but most of the boxes. And then you can already here make, okay, what is going to work, what doesn't work? Do I have to have a box that always have to be ticked, for instance? Now, trade entry, what works for me, what doesn't work for me? Am I a set person? Do I do better if I would have waited for price action instead of set, right? And then trade management, the most important part here is I start with the base 1 to 2, 1 to 4, profit taking, moving stop losses to break even as per the basic set of rules. But then I'll basically review my trades and really check, wow, hey, if I didn't move my stop loss, for instance, I would have made profit, because I can kind of predict the direction. But just because price was very choppy, I got always stopped out. And a very good recent example that we have here, for instance, is the British pound US dollar all the way in the daily supply. So if you moved your stop loss to break even, most probably at 1 to 1, it stopped you out 1, 2, 3 times in a row, every time at 1 to 1. But you see what eventually happened. Price actually went from that zone and then went all the way like went all the way south. And this is like, if you played this out, I didn't play it out right. I took profits way too early, my bad. But if you played that out, this would have been a 1, 2, 6, 7, 8 trade or so, right? So my point here is, you really have to understand at some point of time, really review these trades. So how do we review trades, right? So we need a screenshot before and a screenshot after, otherwise, right? And you put this in the Excel or put this wherever you want. And the screenshot before and after takes you a few seconds, right? What I also like to do is, once a trade is completed, I go into my TradeStation, I create a workspace where I have a completed trade, and I just copy paste these trades there. So I can then literally, these windows, I copy there to the completed workspace. So I don't have to change there the zoning. I still have the zones drawn out on the chart, and I basically can then just that completed trades workspace, I can always close and open. When I want to review a trade, I can open that completed trades workspace, and then I can check, hey, on that chart, literally how price developed. I got stopped, and we're going to talk about this in a second as well, more in detail. So I like to have these screenshots before and after, but I also like, and even more important, the TradeStation workspace, where I basically save that and make that completed trades workspace, where I save that, copy paste that from my actual workspace to that completed trades workspace, and have it there, sitting there for a couple of weeks, just to see if price, where price actually went. All right. And then trade journal. So basically what you would do is, now if before I go into trade journal, this is now too big. I just wanted to move it here to the left a little bit. So now, for instance, so wouldn't you really, question from Zena, wouldn't you really only require after will show you where price came from and where you entered? Well, the before, I like the before, in the beginning, I like to have a before, just to have like, to see basically how a good chart looks like, kind of eyeballing. I know what you mean. You capture automatically before, but I always like to capture the before. I don't do before, like, full disclosure, right? I don't do that anymore. But if you have that before one, before price came into the zone, you basically, I feel like, train your eyes a little bit better on how a good zone, if trades are consistently working out nicely, that you see how good zones look like, and and it's just cleaner that you also look back to this zone that, oof, why did I even take this? Because if you see like afterwards and it broke down, a demand zone that broke down, for you it's always clear, kind of, right, confirmation bias in a sense. It broke down, it's a bad zone, right? But if you have this before kind of picture, you can better differentiate between a good or a bad zone. Kind of difficult to explain, but I think I hope you, and yeah, yes, you understand what you mean. Okay, it's just then better, right? Now Dennis is saying, to the review part, I was in the beginning really frustrated when I lost a trade. It felt like I do not know the game, but after logging also the chart per screenshot, 4 weeks, daily income, weekly and monthly, quite more weeks. After my stop out, I found out that my thought of direction was right, and I had to put my stop loss under pivot just a little bit more away of, or my trailing was not right. If I had given the market more space, my trades would have been more efficient in case of collecting R's and some more points. But if I had never reviewed my trades few weeks after, I would not have found out that I'm on the right track. So I do before, after stop out time, and after a few weeks, 3 screenshots. So analyzing this one part more was a level up for me. Yeah, 100%. Like, thank you for that small essay that you wrote. Yes, I can fully confirm, fully agree. It's a game changer if you review the trades, and that especially that understanding. And this is also something that I realized at some point of time when I got stopped out, for instance, several times. I wanted to understand, and clearly what you said, I wanted to understand, am I directionally right, or was I completely off, right? Because if you're completely off most of the times, what do you think is, do you think if you're off, like completely off with your stop outs most of the times, let's assume you have 10 trades and you got stopped out 7 times, and out of these 7 times, 6 times you are completely off, and price went like not only through the zone, it went like completely, like never came back. What do you think is wrong? Is it then most probably your approach, right? Then most probably your approach, that your analysis, right? That you exactly revisit your criteria. Perfect, right? Exactly. So if you're completely off most of the times, your criteria is off, right? Your decision making in, is this a good trade, yes or no, is off, right? Because I don't know if you have realized that most of the times directionally we are kind of doing quite well, right? It just boils down to oh, that level below or that level above worked nicer, or price just dropped to another weekly a little bit lower and then, you know, started to go up, right? So most of the times it's really that directionally we are right. It's just then what we have to master is really that timing area, right? How to time the market, not whether from here around here price is going to drop. It's more like from here price is going to drop. Let's time this area. That's the all asset, that's the mastery at the end of the day, right? That's the mastery. So perfect. Yes, Dennis, I fully agree to everything you said. That's a huge game changer. And also this gives you confidence in then letting trades run a little bit longer, right? Because let's assume now, I wanna just quickly, right? I hope you don't mind that we do a little bit longer, but I think this is really important. So let's look at a stop out, right? Let's look at a stop out here, a potential stop out, right? Here, and then we look at the potential winner, a winner as well. So why is seasonality gone? Okay, it doesn't really matter. I would need to add it, but I think it's fine. We know the drill. I posted that and we discussed it in the DMO anyway. So stop out from here, right? So we said zone, demand zone, let's buy it, right? So if we look at the boxes that has been ticked, what boxes can we say has been ticked here? So we are daily demand, right? So we had more or less weekly demand as well, so weekly coverage. What about monthly? No monthly coverage, right? So this box we didn't tick here on this trade, right? Already interesting finding. Hey, is this important? Yes or no, right? And maybe it's going to be important for you, maybe not. I don't know, but it's a finding, right? So now let's go back to the daily. Now, seasonality was up at this point, right? So seasonality was tick in the box, didn't help us. Under valuation, tick in the box, right? We were also, the valuation was also tick in the box. So most boxes were ticked. What about trend, weekly trend? Well, weekly trend, I would say, right? We could argue weekly trend. We said, what's the weekly trend? Are you arguing this here? Is it down, or are you taking the big picture? Are you taking the big picture? Now it's actually, price was here, so we didn't make a lower. We didn't make the lower low yet, right? So I would argue trend goes kind of from wherever you go, more or less. Here actually you could argue, well, now this is really right important. How do you argue it, right? Are you saying here lower high, so it's a downtrend, or are you taking more like this as one wave, or and say it's more like a sideways trend and you make an anticipatory uptrend, right? Well, if your rule is then down, right? So this is then important of how you interpret the rule 100%, right? If you take these pivots and use these pivots, then you can say it's maybe a downtrend, right? It's a downtrend, and you could maybe say, hey, it's anticipatory up here, or whatever you want to say, right? For me, it was like, for me, right? Because I trained my eyes on more like big picture. I was like anticipatory up, or I'm still anticipatory up, right? I'm still anticipatory up. So that's the trend. So anticipatory up, whatever you would have ticked is fine. Now, obviously, right, you could argue here a lot of things, and this is absolutely okay. Now, we ticked a lot of boxes, right? Which box didn't we tick, and which box was completely off? And we mentioned that as well. Which box was completely off? You guys remember which box was completely off and completely against? COT, perfect, right? Thank you, Camilo, amazing, right? Oh, what a nice, interesting finding. COT was completely against us, right? COD was completely against us. So if I go back to my here criteria box, I see all the boxes were basically ticked except COT and monthly coverage, right? Every other box were ticked. Now, you have to now understand that you need a proper sample size to derive any conclusion from just that trade, right? You cannot just say, okay, now that COT box was not ticked, that was completely against the opposite. My COT box always has to be ticked. That's not what I'm saying. I'm just saying that that's an interesting finding, right? If let's assume you would have 10 trades and every time you got stopped out, or most of the times, you cannot say every time, but most of the times you got stopped out, the COT was against you. So where would you put then focus on next time? On this, that the COT is in line with your trade, right? But just by now saying, just now by looking at the New Zealand dollar, by this, just by looking at this single trade, saying, oh, I got stopped out, the COT was not in line, so now I have all my next trades, I have to make sure that the COT is in line. That's not what I'm saying, and that's not the right way to move forward, right? If this is not your priority right now in your set of rules, just because of this setup, you are not allowed to change it. Take 10 trades, observe it, and then, of course, you cannot on stock trades, by the way, on stocks, you cannot use that, right? You can only use that on everything that is available on futures, right? So, but taking this into account, that all the trades that I took in that is available in the futures market, let's observe what this tool is telling me after 10 trades. Do I have to put a lot of weight to it? Do I have to make it mandatory that this box is going to be ticked, and so on and so forth? And this is what you basically going to go, just taking this as an example, as a stop out example, for instance, it's an interesting finding, but it's even more interesting if it's occurring over and over again when you get stopped out. Does this make sense to everyone? Like as an example? And this is basically how you yeah, and this is how you basically then slowly find, this is how you find like things that you can tweak on, right? If you don't, and I like that Camilo said that 2 or 3 trades, and I understand that this makes you in general, that everyone, right, makes you discouraging feeling, but you have to have that proper mindset in place, that it's really about a proper sample size, that you can have 4 stop outs in a row, and the 5th trade is going to be that 8-to-1 trade, right? It literally can. Yeah, I know it would be, we would have really a serious discussion. It would it's still discouraging for you. We would still have a big discussion here. right? So, but obviously, yeah, this is how you would see, this is how you would then also start prioritizing certain rules here, right? Yes, yes. Yes, so another good example. Now let's look at a good trade, right? Let's look at a good trade, and here also what we could have done here or there or whatsoever, right? I don't want to talk now about add-ons, right? I just want to talk about, for instance, entering the market. Now, short below the trend line here on orange shoes, obviously we know worked nicely. Now, if we have here this drop-based drop, the question is, if we short this, most probably we shorted it. I think I remember it was this candle here, Now you didn't have the drop-based drop yet. The question is, where do you move your stop loss, right? When you short below here, when you enter the market here, where do you move your stop loss? Do you leave yours? Do you make it a small zone and say, wow, if I have all this as a profit margin, then ka-ching, happy days? Or do you say, hey, less aggressive, more conservative, I maybe put my stop loss above yesterday's candle, because you could have, right, would have also make sense, right? In retrospect, you would always say, oh, if I could have put my stop loss here, I would have made, I don't know, whatever, right? If you put your stop loss here, for instance, if you said, I put my stop loss here, your risk to reward is obviously less. It's most probably cut in half, but it's maybe safer. You don't know, right? You don't know. Now, my point that I want to make here is, let's assume now you say your rule here is on the candle, on the daily candle where we get the breakout, I put my stop loss above the high, because what I would assume is if that candle breaks, it will continue to go down and it will not go higher. So I just put my stop loss above that daily candle, maybe 33%, right? And you would have this as a zone. Now here, obviously it worked, but what happens if you followed exactly that set of rule that I just created that rule, right? That, I mean, that's a rule that you can have, but saying, okay, if I trade a trend line breakout, I put my stop loss above the breaking candle's high if it breaks to the downside. That's a rule. Now, try this 10 times and see if you can gain more R's with that rule, because for sure a few times price is going to do this. Oh, stop me out. Or comes back, stop me out. Another one, it stops you out. So you might have more stop outs. However, the one single time where this works, you make a 1 to 8, 1 to 9, 1 to 7, and basically is completely erasing these stop outs, and you are highly profitable. Whereas if you maybe the times that you also left a little bit more wiggle room, that you only gained a little bit, that you basically cut your profits in half, your R's in half, but still potentially gained less compared to, hey, I have more stop outs, but when I hit that winner, I got triple the amount of R's, for instance. You know what I mean? Can you follow me? And both things, there's nothing, it's just, there's no right and wrong here. Very important, right? You have to look back to these trades, review these trades, and see if one rule or the other would have made you more R's in general, right? But you have to start with one rule, follow that, and see basically how it goes after a proper sample size, right? So this is really important. You can follow, nobody's saying anything. Is everybody, or is someone here who cannot follow that rule, right? That how you create these rules. And these rules are just kind of common sense, right? There's nothing, again, nothing scientific. Why am I saying to put the stop loss above that high and not above that high? I just use any candle's high, right? I say today's high or previous day's high. This is right. It's just you put it above a high. Here you leave a little bit more wiggle room. Here you leave less wiggle room. Nothing is, this is not right. This is not wrong, right? It's just about what is going to work out for you at the end of the day, right? If you look at the overall R's, what would have made you more R's in general if you use this as if you trade, for instance, trend line breakouts, just as and you could do similar, like how you review things. Yeah, keep refining rules only can be done if you log and review results. So just as a last one here, and then we quickly go. Actually, it's it's so late. I think we do one more session. Maybe let me think about that. But I don't want to. I don't want to, guys. I mean, you can. I'm not sure if you are already falling asleep here. Now. What I wanted to say, yes, profit taking. Now, let's assume you took the trade like this, right? The short here, tight stop loss, and you have a fixed target. Let's say, oh, it's with the trend, blah, blah, blah. Let's do a 1 to 4 target somewhere here, right? Somewhere here, target somewhere here, target somewhere here, right? Target somewhere here, 1 to 4, wherever 1 to 4 is, right? Now you always say 1 to 4. This is your target. But before that, because you're now trading completely mechanical, right? 1 to 4 target, fine. Now, what you would do is when you take it, before you take a trade, right? You look at the, you don't just, you always look at profit margin. And you basically say, hey, I have a gap down here and I don't have any demand here. So now potentially price could go all the way down here to fill that gap, right? This is what you, before you take the trade, right? When you place the trade, or basically when you place the trade, that you would say, you have that target that you have in your head that you see, okay, potentially price could go all the way down here, but my rules right now tell me I have to take profit at 1 to 4. So I don't basically go against my rules because I don't want to, like, I want to learn how to be consistent, but I want to have this target, that invisible target, so to say, however you want to call it, that invisible target all the way down here. And let me see if I was right with my invisible target. That's literally how I start, you know, how I was like starting to do things when I was frustrating, when I called in the beginning of my journey, or at some point of my journey, when I was calling zones for myself and taking trades, and I took fixed targets like 1 to 3, 1 to 4s, 1 to 5s, and or 1 to or even 1 to 2s. And when I was looking at the chart that I was like saying before, wow, but price has so much potential to go lower or higher, depending demand or supply. In this case, oh, price has so much more potential to go lower, but I need to take profits at 1 to 4, or I cannot, like, I'm getting nervous when price is going to go lower because at 1 to 4, I make already X amount of dollars, right? Getting back to the money thing. And I was tracking this and I was logging this and I was really observing this closely if my invisible targets were hit. And you know, guess what? At some point, I got so confident with that. Wow, a lot of times after reviewing a trade, my invisible targets were hit so many times that I got the confidence to say, I can really anticipate where price is going. So I was saying at some point of time, I was saying, screw my fixed target. I'll put my target and at my previously invisible target where I really can, anticipate price to go. Does it always work? Of course not, right? That's not the point. But based on my log, based on my findings, I have seen for myself that if I'm right in terms of direction, a lot of times, or a few times at least, I'm going to be right all the way through. Meaning I can easily, with these big winners, compensate the maybe a few more losers, or I can compensate the smaller profits that I take on other trades, right? But the ones that I try to play out are not usually, this is nonsense, but some of them are, and only a few has to work out, right, of these playing out trades, and then everything is shiny and rosy, right? You can compensate easily with a few more losers. But this is something that you have to really, and this is, I think, this for me, this part here where I had this kind of, okay, getting into a trade, having fixed targets, but on the other side, I have this kind of invisible target where I can envision or anticipate price actually to go from my zone that I'm going to trade. Let me see after a couple of weeks, a couple of days, if price actually went to that invisible target. And surprise, surprise, what I've realized and what gave me a crazy confidence boost at some point of time is like, wow, these price targets, these invisible price targets hit and hit again. So, hey, let me change that rule to have like a more like stretch target that is maybe double-digit R, and the times it's playing out, it's going to be happy days. So I think that because I wanted to close the session with that part, because for me, this kind of thing was at some point of time the biggest game changer out of all. I don't know why, for me, this was the biggest game changer, but it just was. Doesn't mean it's going to be a game changer for you looking at charts like this and reviewing charts like that. But yeah, I mean, I can fully confirm to what Dennis was saying, how important it is to review these trades and looking if you're directionally right or completely off. If you realize that you're off most of the times, then as Sena said, better review your criteria, because something is off with your criteria. If you're right a lot of times with the direction, then it's just about fine-tuning the market, the timing the market. And when it comes to profit taking, stop moving stop losses, and where to take profits and where to have targets, or if you don't even need targets, and take profits based on price action. This is what you find out if you really like get into a trade, having fixed targets as a baseline, and then you basically have this kind of, okay, invisible targets where price potentially could go. And then you basically review all these trades, and then you either gain confidence in maybe having more stretch targets, or maybe you are happy, like actually Julian. I don't want you to really like now like be oh, this is the way to go. No, I'm just telling you what worked for me. But Julian collected more R's than me through, I have to say that, right? Julian collected more R's than me. I mean, if I collected 50 R's, right, it would be, anyway. But still, what I wanted to say is that, yes, any approach could be right. I never challenge, right? So at the end of the day, your goal is to achieve 24 hours. However you make these 24 hours, it's completely up to you, right? But I'm trying to give you a perspective on multiple ways how you can improve your trading. And I think that logging part is just, that's why that logging part is so essential. And reviewing trades and all that kind of stuff, because without that you cannot improve what you can just not improve what you can only improve what you measure, right? Will Julian Session return? Good question. He was on a business trip last week. Now he has COVID, even though he's vaccinated. So he's sick in bed, but he will feel better soon. But I left, honestly speaking, I told him he can decide. If he wants to continue, he can continue. I put the pressure on him. That this is how I'm going to do it now. I told him he's a little bit bummed about the appearance as well, a little bit disappointed that he didn't even get 10 people into the room. So he was like also telling me, why should I continue if people don't show up live? I told them, look, the people who are coming, they really enjoy it, they really love it. So we don't want to punish the people who are coming, and we also don't want to punish the people who really cannot join live because of time difference, because we still have a lot of German students, and now that they live abroad, right? We have 2 from Australia, even 1 from Brazil, like all over the place. Kenya, Germany, and the time difference is just all over the place. So there are a lot of people, at least 50%, who cannot join live because of time difference. So I told him that, but still I told him it's up to him, right? So don't blame him if he says no because of the low appearance, because he also said, look, he has to prepare the sessions and so on. It's a lot of work for him as well. So yeah, so that's to be fully transparent with you guys. Yeah. Yeah. All right. So I want to stop here. So maybe I do. So if we quickly brainstorm, do we need to get a little bit more into certain, because it was a little bit all over the place, but I just wanted to give you an idea about the logging part, right? And what you need to log and what you can actually do by reviewing trades and what your findings can be. Do you want, should we make, I don't know, a few more sessions on looking into single criteria, like, again, trend line breakout, where to move your stop loss, what are the benefits, what are the disadvantages? Stuff like that. I really would like the last bit of the session, a refresher on entry and management. I think that would be actually quite a good idea, if you agree, if we can use this here. Yeah, we can definitely we can definitely do that. No big deal. Yes, we do that throughout the week. I think that's a good idea. So we can continue this part in the sense of looking more like, okay, trade management and trade logging, entry points, and what are the possibilities and how to log these things. Yes, let's do that. No, perfect. We will definitely do that, and then we will finish this off mental game with journaling and stuff like that as well. All right. We do this because next Sunday, I think it's Jan's, it's the 5th, Jan has planned to do like an indicator session with our tools for if you have questions for the our 3 tools that we provided to you. So he will do this next Sunday, right? So please watch his indicator lessons and bombard him with questions that you have in terms of the indicators. So he will do this next Sunday, and then we will just basically, I would say, continue with this stuff, or we do it throughout the week. And then Jan is also doing a trade plan series as well, that we have that as well up to date. All right, so that's how we move. That's how we move on. Great. Yeah, I think that's going to be beneficial to talk a little bit more about that. All right, ladies and gentlemen, sorry for that I kept you so long. It's almost like 2 hours. Thank you for coming, and thank you for being here. It was my pleasure as usual, and talk to you guys soon. All right. Bye-bye.